segregated portfolio company rules, what's available there in Cayman, as well as then talking perhaps a little bit about portfolio insurance companies, I think they're called, aren't they? The ones that sit beneath. So, Andrew, give us an overview of that, if you would. Can you remember when the legislation was passed? And
I don't remember when the legislation was passed for the segregated portfolio companies. For the portfolio insurance companies, the PICs, that was just in the last 5 years or so. They're starting to grow. It's fairly new legislation, but it was, again, SEMA being sort of on the forefront and trying to make sure that they're regulating in the way that businesses want to operate. And so it's exciting to see that they're, open to change and open to, moving forward with the industry.
Yeah, I mean, I've used segregated portfolio companies in the Cayman Islands since the mid-noughties. So the legislation's been around quite a long time. And then the idea of the portfolio insurance company legislation was really to overcome the problem that a segregated portfolio within a segregated portfolio is not a standalone legal entity. And therefore, if it wishes to transact business with another segregated portfolio within the same company, you effectively are shaking your own hand. And the legal basis for that is sketchy, to say the least. So it was deemed necessary to find a way to enable segregated portfolios within the same overall umbrella company to transact business with each other or with the company itself. And the portfolio insurance company it's very similar in some ways to the incorporated cell that we see in some onshore domiciles, but it effectively sits beneath the segregated portfolio and one of its cells. And being therefore a separate legal entity, it is incorporated. It is able then to transact business in a sort of solid contractual way with other cells within the company. And I think that's become pretty popular, hasn't it? I think that's been good uptake.
There has. We've seen, quite a bit of growth in that sector. I think it's becoming, as popular for new entities starting up, probably more so than the old SPC structure. If you're looking to start one of those captives now.
Yeah.
And I think a good point as well is for people who start off in segregated portfolio companies, and if it was third-party business within it. So you may have segregated portfolio companies that segregate different risks for one effective ownership, or you may have multiple different cells with different ownerships in your segregated portfolio. The nice thing about moving to a PIC is that it allows a segregated portfolio owner to appoint their own directors and officers of that PIC, whereas segregated portfolio owners don't have that availability in that the core directors and officers are the controlling parties to that cell. So it offers additional flexibility, but it also allows for some of the benefits of the overall structure as well. So as far as audit and license fees, there is relatively lower fees overall because you benefit as part of the full PIC structure. So it may be more advantageous for people rather than just a standalone.